Yo, what's going on, everybody? Welcome to TrendSpider Live. My name is Mike, and today we are continuing the earnings calls. Today with Texas Instruments, that's TXN. We got also STX reporting today, and then we also had UNH report this morning, and we also have NXT that we're going to be watching the moves in real time as they happen right here when the bell rings in about 15 minutes. So if you guys are out there in the chat watching, let me know down in the chat below. Let me know what you guys are watching. If you guys have any earnings plays on UNH, if you bought the dip maybe in UNH today, that would be an interesting move. And if you have any comments about all the other earnings that are coming out today, as I said, we have STX that is going to be one of the bigger ones. It is making all-time highs today as we speak. Yeah, Seagate is STX reporting today when the bell rings in just about 15 minutes. So let me know, PT Griffin, if you are trading STX, would love to hear your opinions. But as you can see here on the daily chart, I mean, this thing is just continued to skyrocket. It is one of the memory plays, along with stuff like Micron, MU over here, which is also making a new all-time high today as well. And then also SanDisk. SanDisk does report pretty soon as well their earnings on the 29th. So we'll be live for that on the 29th. Make sure, if you guys haven't already, hit the like button and subscribe so you guys don't miss out on any of these earnings lives, because we're going to cover them in real time as the moves are happening. And since we have a little bit of time until, these earnings come out when the bell rings, I wanted to take a look at what happened on UNH stock today. As you can see, it is down about 20%. Let me remove this line right here. So yeah, guys, UNH down 20% today. And so what we're going to do is we're going to ask Sidekick exactly what is going on with UNH so we can see exactly what happened. I'm just going to open up TrendSpider's Sidekick AI, put in this prompt right here. All I'm saying is analyze UNH stocks drop today and give me the main catalyst and summarize it all for us, because I mean, when a stock drops 20%, you're going to want to find out what is driving the move. Of course, there is earnings today, but let's see if there's any other big news that helped contribute to this massive drop on UNH. So now that we have an answer here, let's see what it says. So obviously it says UNH plummets 20% on earnings miss and Medicare rate shock. So the key points is that the stock crashed, of course, 20%. They did beat Q4 earnings, but revenue missed. So they beat EPS, but missed revenue. And then I think the big one here is the 2026 revenue guidance was slashed to 439 billion versus the 454.6 billion that was expected. So that is what caused the UNH crash today. Apparently it suffered its worst single day drop in years after a double blow hit the healthcare giant. So let's take a look at the chart again right here. As you can see, I have the reports tab on TrendSpider open, which is going to show us all of the recent earnings reports for the last couple of years. And I have revenue selected here. As you can see, year over year, all these green bars here are indicating that the stock was or is growing year over year in revenue, which is a good sign. But the thing is, they missed the analyst expectations, as you can see with the surprise rating here, minus 0.29%. So they slightly missed on the revenue expectations. And EPS over here, I mean, wow, UNH had this great EPS trend until recently. Quarter two of 2025, it got absolutely decimated. And year over year, the changes are pretty nasty. This one's minus 69%, but they did have a slight beat of the analyst expectations. So that is what is going on with UNH stock today. Let's see. PT Griffin says, I never trade during earnings. I have been burned one too many times. Yeah, I'd agree. I wouldn't really recommend trading specifically through earnings. Of course you could. But yeah, as we said in chat, it is definitely pretty much always a gamble trading through earnings. They can beat across the board and still drop. So, I mean, yeah, it's a tough one to trade for sure. But let's pull up TXN and let's do some analysis of these stocks coming into earnings today. So how I'm going to do that is, again, I'm going to use Sidekick AI. I'm going to put in this prompt right here. I'm going to do this. Yeah, I'm just going to send this right here. So all I'm saying is analyze the upcoming TXN earnings announcements today. And it's going to give us the EPS versus forecast and the revenue versus forecast, all in some nice, beautiful charts for us to look at. And then it's going to give us any of the recent news. I'm asking it to give us a bull and bear case for the stock. And also I'm asking it to give its take on whether it's a buy, hold, or sell before the earnings come out in just a few minutes here. So let's see what is going on. Made some interesting charts this time, but it looks like year over year and year over year has been pretty good for EPS. They've been consistently beating, has been declining though, as you can see. Revenue performance, again, year over year change has always been positive for the last 3 quarters. But let's see what is going on and what Sidekick recommends going into earnings. So recent news is that, positive momentum. There's some price target upgrades, which is always good, of course. Let's see. Intel supply shortage comments dragging semiconductor stocks lower for sure. That's just some of the recent news. Let's see. Sidekick's overall take is hold. So it says TXN beats consistently, but growth is decelerating sharply, which we did notice up there. That is very true. It says wait for earnings. If guidance disappoints, this confirms slowing in the semiconductor demand. And then the sequential revenue drop expectation is also a red flag. So it's saying hold. Ultimately, if you're not in, if you were to ask Sidekick, it would say do not buy, do not sell if you're in, but just go ahead and hold. So I'm also curious what it says about STX, because Seagate is going to be a very big one today. STX, again, is hitting all-time highs as we speak, pretty much. Let's take a look at the daily chart one more time here. As you can see, made another new high today. Absolutely beautiful trend. If you put on something like relative performance, which is here on the TrendSpider platform, it is at 99, which means it's practically outperforming everything in the market. Somebody asked about Microsoft. I believe their earnings is tomorrow. Yeah, Microsoft earnings tomorrow. They've had 3 nice green candles, 4 on the daily chart ever since the bottom right there. So we'll cover Microsoft more in depth tomorrow as the numbers come out. Let's see what we got here for STX. Let's go all the way down to the bottom. Again, it's saying hold. So for STX, it's saying the risk to reward is unfavorable at current levels for STX. It says while the fundamentals are improving and the memory market is tight, STX has priced in a ton of optimism. And then it also mentions the Q3 2025 miss demonstrates an execution risk. So it's saying, again, wait for post-earnings clarity. Looking for a strong report with, conservative guidance, good guidance, could offer a better entry, it's saying. While any disappointment will create opportunity 10 to 15% lower. So we'll see what happens and see if Sidekick ends up getting this right. I'm curious, what's your guys' take on everything going on? If you guys are out there in the chat, let me know. Are you guys expecting TXN to beat? Are you guys expecting STX to beat? Let me know down in the chat. I am curious to hear what you guys are thinking. But right now it is 7 minutes before the bell rings, and I believe TXN does go ahead and report earnings just 1 minute after the bell rings. So we'll go into the 1 minute chart here as I pull up exactly what time. Yeah, 1 minute after the bell, we will get the numbers for TXN here. I'm going to put on my Mentor Q gamma levels indicator. My computer is lagging a tad bit there. Let's see, you got daily intraday levels. Perfect. Let's go here. Let's hide the relative performance. And as you can see, there's actually a pretty big move expected to happen here in TXN. We got the 1 day minimum around 188, 1 day max around 204. That is about an 8.5% expected move today for TXN earnings based on the Mentor Q gamma levels indicator. If you guys are just joining in, make sure you go ahead and hit that like button and subscribe, because you guys, we're going live for all of the big earnings coming up. And we also got FOMC tomorrow that we will absolutely be live for and streaming. We'll be streaming Powell's speech. So it should be a good time. It's going to be a wild week for the markets. Again, someone else mentioned earlier, Microsoft is actually going to be reporting. Tons of big names. Tesla is also reporting. We got Meta, Apple, so many big names that you guys do not want to miss out on. And of course, FOMC is going to be massive, as it always is. So let's see what you guys are saying in the chat. Somebody is saying it's too extended, have to present something spectacular or will tank. Matt U5G, which stock are you talking about? Are you talking about STX? Yeah, people, STX is tricky. Someone is saying STX is tricky because earning stocks mostly have gains. Then when market closes minus $80. Yeah, I mean, you know, we've seen it happen before. Just recently, you know, we saw, of course, UNH tank 20% this morning. And if I pull up Intel over here, you guys can remember probably Intel's earnings report that wasn't too long ago. It dropped about 16%, more than 60%, just on earnings alone. Kind of killed the momentum, but I mean, relative performance on Intel is still at 97.6. So yeah, it'll be an interesting one. Let's take a look again at SNDK and MU as we come closer here into earnings, or into the bell closing. This is SNDK on the day. Started off pretty strong, but ended up just kind of consolidating here. And Micron, actually pretty strong. It did have a gap up this morning. So congrats if you held on to MU or you're still holding MU. You've been absolutely killing it. Let's take a look at the talk of the town, silver. You see silver today almost went down to fill up that gap from a couple of days ago, or from last week, I should say. But it's, again, back up on the day, super strong. Take a look at gold here as well. Gold, absolutely killing it, making new highs. Look at that GLD ETF, just absolutely beautiful for gold. So congrats if you guys are still long the metals. They're still killing it. Let's take a look at the mining stocks. It looks like mining stocks might be down. HL is down. That's Hecla Mining. CDE, another mining company for gold and silver, looks a little bit better, but still a little bit down. Look at GDXJ, GDXJ. This is the gold miners ETF. Not making new highs like gold is, but still performing pretty nice. Go back over to STX here as the market prepares to close in just about 3 minutes. Let's take a look at the stock market map today. We'll see where the money is going today specifically. For some reason, my stock market map has been a little bit weird today. So I guess we'll just use a watch list. Add my watch list on the left here. Sector ETFs. This is my sector ETF list. Let's see what's moving the market today. So silver and gold are leading the charge, followed by semiconductors. SMH basically hitting new highs. Yeah, it looks like it hit a new high earlier this morning sometime. And then lowest out of the sectors is XLV. XLV is down today, most likely due to UNH dropping 20%. That'll definitely do it. Then we got financials here coming down as well, along with bonds. Bonds have been a very interesting one as of late. What time is it? We got about a couple minutes until earnings drops. But yeah, if you look at bonds here, still not going anywhere, you guys, not going anywhere. So the clear inflation hedge, or the the dollar risk hedge, has obviously been the metals. Clear as day. A lot of people, thought Bitcoin was going to be, acting like silver and gold, which, it did in the past, but just recently, I mean, it has not been able to break out of this consolidation zone right here. So definitely keep an eye on crypto. It could be setting up, for a future move. As you see, it's really, really tightly consolidating here for the past several weeks, ever since November in 2025. But it looks like the bell is going to ring in just a second, you guys. Let me pull up my multi-symbol view for us. And we're going to take a look at all of these earnings on a single chart here. If you guys didn't know, if you're on TrendSpider, you can chart, I think, like 24 plus charts at one time on a single monitor. I'm just using 4. I don't need that many, but if you guys have massive monitors, absolutely keep that in mind, that you can put a ton of charts up at a single time, which is very nice because most of the competitors of ours do not allow that many charts per screen. But what time is it? We got the bell ringing very, very soon, you guys. So in just a second here, we should start to see some movement. And at the top left corner over here, I have TXN, which is Texas Instruments. We got Seagate, STX at the top right. There's the bell, I believe. Yeah, it just struck 1. And NXT down here at the bottom left. And at the bottom right, we just got SPY. Just to see how the overall market is reacting, if at all, to these earnings. Again, we should start seeing some movement any second here. Let's see what happens. What are you guys thinking here? Are you guys thinking STX is going to go up? We got STX right over here on the right. It seems like a lot of you guys were interested in STX more so than TXN. It's probably the one I'm watching the most as well, is STX, because that is a very big market right now, or trending market, I should say, in the memory names, again, along with Micron and SanDisk. So however this stock moves probably will affect Micron and SanDisk, maybe at least a little bit. And here we go. We got our first move up here, move down on TXN. We're seeing a massive move down on TXN right now. That was about a 4% candle to the downside. Let's see what else we got. And don't worry, guys, after we watch these charts in action, we're going to analyze exactly all of the numbers and what is causing these movements in real time using TrendSpider's AI agent sidekick. Somebody saying STX swapping between $13 and $16. TXN is seeing some absolutely insane movement. We just saw a 4% drop, and then already it got bought up from that low, and we're up now, up 4% or so. So it looks like TXN is reacting pretty positively to the numbers coming out. Again, we'll analyze them all in just a second. But so far, some positive looking movement. Let me see when STX is actually set to report for us. STX, we see over here, is reporting 5 minutes after the bell. So just in a couple minutes, we should get some nice movement there on STX. As you can see, there's a weird bid-ask spread going on right now. We're sitting now at 376. It just jumped up from 375 to 376. So there's definitely some movement going on as we prepare to see how the market reacts to the numbers. And if you guys are just joining in, welcome. We are obviously looking at all the earnings as they're going to start getting reported here in real time on the 1 minute chart, so we can see exactly what's going on as the numbers drop. And if you guys haven't already, make sure to sign up for the free TrendSpider newsletter down below. We give you guys tons of trade ideas every single week straight to your inbox for free. You can use the link, first link in the description down below, to go ahead and sign up for free. Post a link in the chat right now as well. I'm sure we will be breaking down all the stuff in the weekly newsletter for you guys. Oh, well, it looks like TXN is so far a winner today. Up about 4.2%, just ticked up almost to 5% right there on that candle. It continues to go up. Broke over 200 and now sitting about $205 a share for TXN. So very nice. If you guys are in TXN, let me know in the chat below. I'm sure you guys are happy, unless you were shorting it. And also make sure to like and subscribe, guys, if you haven't already, so you can catch us on future lives. We'll be live again tomorrow with the founder and CEO of Mentor Q, the creator of the Mentor Q Gamma levels, those options levels that I always have on my charts. Not always, but I use them quite a bit, especially for earnings, to see, the expected moves going into earnings. Wow. TXN continues to climb, trying to hit 207 right now, getting a little bit of a move down on STX. We should get the STX numbers in about a minute. So stick around and we'll see probably this chart makes some nice moves. I'm going to change SPY to MU for now to see if MU gets affected at all by the STX earnings announcement. Somebody is saying that TXN had some 220 calls, some big bets on 220 calls on TXN in the chat. Let's see, 220 calls. That's still pretty far out the money. And whoa, we got some movement going on STX right now. It just jumped up to about 387, all the way down from 374. It's like a $13 move to the upside. Wow, STX is looking very nice, at least for now. But you never know what's going to happen. Ever since market closed, it's up about, oh, now it's coming down. Yep, see, can't always trust that first move, you guys. Now we're sitting down about 2.5% or so, and it continues to drop, now down over 3%. STX is unfortunately dropping, and so is Micron. If you see Micron on my bottom right chart right there, that is Micron dropping on along with STX. It is some wild movement, down about 5%, which isn't actually that bad in the grand scheme of everything, but not exactly what you want to see if you are long some of these memory plays. But we'll see what happens. We should have an earnings call probably in about an hour. We'll see if we get any positive forward guidance from that. And of course, we're going to analyze the numbers for all of these names in just a second here. So stick around while we watch the charts move in real time. After that, we'll analyze the numbers and see if they came out good or not. Oh, wow. We got NXT just flew to the upside. $4 move up on NXT here. They definitely just reported that's about a 3.5% move up. Now about a 5% move to the upside on NXT, and continues going. It is flying off of my charts on my bottom left chart over there. Now up over 6%, and MU continues to fall along with STX. Let's pull up SNDK as well. SNDK did indeed drop on that STX movement as well. Just a bit, nothing too crazy though. It looks like STX is mostly hanging in there. It actually is about flat now since the earnings came out. But some pretty crazy movement to the both up and down side so far. NXT as well. Looks like it is trading higher on its earnings report. Yeah, looking honestly pretty solid, you guys. We got NXT up, we got TXN up, and we got STX flat for now. Micron flat since close, while NXT just jumped up yet again. Big candle there, hit all the way at 119, while NXT, beautiful setup, by the way, you guys. Absolutely beautiful setup recently. It's actually hit plus 13% there on NXT at one point at the very top from close. Ooh, so some pretty nice movement, you guys. Overall, I'd say it looks pretty positive for now, but we're going to take a look at the numbers. So it's kind of hard to see, or hard to tell, I should say, what STX, what the numbers were. We're going to analyze them in a second, but I'm going to start a poll here for you guys on YouTube. Start a poll. I'm going to say, did STX have a double beat on earnings? Yes or no? Vote yes or no in the chat right now if you're on YouTube. This question is simple. Did STX have a double beat on earnings? Yes or no? The numbers should be out, and we're going to take a look at them just a second after I see some of your guys' votes here. Some of you guys may already know. Oh, yeah. If you're trading UNH, I am sorry to hear that. But it looks like the bulk of the moves is pretty much done. So let's pull up my other chart over here and take a look. Let's analyze STX first. Pull up the daily chart. This is the daily chart with the earnings move built in. And as you can see, it really has not dropped much at all. It's still green on the day overall. But I'm going to open up my Sidekick AI right here. I'm going to start a new chat. And we're going to start with STX. I think a lot more of you guys are interested in that. And we'll see what Sidekick has to say about the earnings. Let's go back to the 5-minute here. Put on our gamma levels too to see if these gamma levels went into play at all. And it looks like if you were long option so far in STX, has not gone to the max or the min expected move for the day. But let's take a look at the news widget so we can see what the numbers were. Seagate beat EPS and sales beat. So it looks like they had a double beat. So if you voted yes in the poll, you were correct. Congratulations. It looks like 67% of you guys did go ahead and vote in that. I'll end that. But let's see what Sidekick has to say. So it looks like we have this nice, beautiful chart right here. And this is our EPS chart. Again, they did have a double beat. They reported 261 versus the 228. So this is the green one is the reported numbers. This was the estimated. So looking pretty good, you guys. Looking pretty good. Revenue, same thing. Green bar right here is what they reported versus what was estimated. So they did indeed have a double beat on EPS and revenue. Somebody asked, what is Sidekick built on? Sidekick is built on all of the platforms data that we have here on TrendSpider. So we have, real fundamental data. We have SEC filings. We just recently added earnings call transcripts that you can analyze with Sidekick. We have seasonality data. We have unusual options flow. It's built on all of the data that we have in TrendSpider. And then you can actually pick which LLM model you want to use. We highly recommend using the Claude models because it just tends to do the best, but you can also use, I believe, GPT and Gemini. Let's take a look what Sidekick has to say. Obviously, okay, let's see. Forward guidance looks like came in. Revenue guidance came in line, and then EPS guidance came in higher than expected, which is very nice. Looks like gross margin improved as well, or it's expected to improve. Awesome. And it looks like and it looks like Sidekick gave a buy rating. So it said, STX is executing flawlessly in a structurally tight market with over 2 years of visibility. HAMR technology creates a durable competitive moat, and AI-driven video storage demand is accelerating faster than expected. Again, you guys, this is the same news that is driving stuff like SanDisk. So basically, they reported great earnings. There's that memory shortage, which is just causing, a beautiful storm for STX. But as you can see here, the stock is, if anything, a little bit down since close, really flat. It's pretty much flat since the market closed, which I will take over a massive dump any day, any day. And if you look at, like SNDK, see not much movement, and MU kind of the same, pretty flat since the close. So overall, solid beat on STX, and it did earn a buy rating from Sidekick, which is always nice to see. Let's take a look at TXN, because TXN did move up in the after hours session, you guys. Analyze TXN today as well. Going to do the same prompt. It's going to tell us exactly what happened in TXN. Pull up the chart of it for us. As you can see, TXN did break above some resistance levels here from the Menther Q gamma levels indicator. Someone's saying check out FFIV. Sure, I'll take a look. FFIV is absolutely ripping right now. They did report earnings. I'll analyze these numbers for us in just a sec, because that is a very, very nice move. Wow. Let's check out the weekly chart here of FFIV. Interesting move. Weekly chart recently had a pretty nasty couple of weeks. Back in October of 2025, did end up bouncing right here at this previous support level, this key pivot level right here around 225. So was able to hold 225 pretty nicely there. Now it's got to work against this 275 level, which I think it actually did, because now we're sitting at 301. So it broke pretty cleanly above that, and it's looking really good for FFIV. take a look at the numbers in just a second. Let's take a look at TXN's numbers though. Texas Instruments. Again, we'll pull up the 5-minute. Currently sitting up a little over 5% on the day, or in the after-hour session, I should say. Let's see what Sidekick has to say. Today's announcement. So it's saying Q4 2025 actual did not come in that hot. Sidekick is saying, hold on, this might not have these the right numbers. Yeah, so revenue came in good year over year, but it looks like it missed. And then, yeah, EPS came in not so hot either, you guys. Look at this. So you can see the EPS came in pretty significantly below the estimate there. About minus 2.3% surprise. And revenue missed as well, the estimate. You can see revenue actual. Here's the red bar compared to the estimate. So it's double miss on TXN. Let's take a look here. Looks like we had some guidance numbers at least. Looks like the Q1 EPS guidance was a beat, which is nice. And then revenue guidance was also a beat, which is still positive news. Probably what is driving the move up is the double beat on guidance. Yeah, the guidance is absolutely a positive for TXN, but Sidekick did hit it with a hold. It says while TXN beats on forward guidance and showed strength in data center, the Q4 miss, the double miss, combined with industrial market hesitancy and gross margin pressure does warrant caution. So it is giving it a hold on TXN. So that is not looking as good as STX. And interesting enough, we are seeing a move to the upside on TXN, but you know, Sidekick does not like it nearly as much as it likes the STX move. Maybe not the move, maybe just the fundamentals. Again, STX is down in the after hours session. Let's take a look at this FFIV for you guys. Someone was commenting on this below, and they are up 10% during their earnings. So I'm going to go ahead and ask Sidekick what is going on FFIV. Yeah, FFIV is absolutely running right now. Again, they are up about 11.5% right now from the market close. Let's open our news widget here and see what's going on. So yeah, it looks like FFIV raises 2026 guidance, which is good. And then they raise the sales guidance. So double raise on both sales and EPS guidance for FFIV. But here's the actual numbers. It's like EPS beat and sales beat by quite a bit. They both had a double beat and a double beat on forward guidance. So double beats across the board. FFIV is looking spectacular. And we're going to take a look at what Sidekick has to say. But I mean, look at that chart. That is absolutely beautiful if you're holding the stock into earnings. Right here, we see the Q1 2026 actual EPS absolutely destroyed the estimate and Q1 2025's actual number. Same here with the revenue. Q1 2026 actual absolutely decimated the analyst estimates and the Q1 actual number. And again, it looks like the EPS guidance meets, maybe a slight beat, but basically a meet in line. This is for Q2 2026, and then the revenue guidance beats. And then the whole 2026 year, fiscal year 2026, guidance was raised for both revenue and EPS. So incredible report, you guys, incredible report. But still, Sidekick only gives it a hold. Let's find out why. So it says strong operational execution and massive beats and raised guidance suggest underlying business health, but it looks like the security breach creates near-term uncertainty. Now it's saying wait for Q2 results to confirm stabilization before buying. Current holders should maintain positions given long-term AI/hybrid cloud positioning and aggressive security investments. interesting stuff there. Yeah, F of IV absolutely killing it. Yeah, apparently there's some security breach. I don't really follow this name much, but there was a security breach, and that is the reason why Sidekick was saying that it is not a buy, but it's a hold, even on that insanely good earnings report. And then we also have NXT. You guys, NXT to me was one of the most beautiful looking setups. I mean, look at this right here, you guys. Basically a perfect like bull flag or whatever you want to call it, volatility contraction pattern, VCP. And it's actually just breaking out to new highs right now on this earnings report. But you see a nice uptrend here, came down right here and was basing up for quite a while. Had a clear pivot breakout here on January 12th with solid volume. And so if you were to, want to follow the trend in this breakout and you bought it, hopefully you didn't get stopped out there, but you'd be sitting very pretty right now, would be able to set your stop somewhere above this line at break even, or maybe still keep it low, depending on however you wanted to play it. And it is looking great. So let's take a look at what happened with NXT here. Going to send in our same Sidekick prompt to NXT and see what is going on. If you guys are just joining in right now, make sure to hit the like button and subscribe if you guys are enjoying this live earnings analysis. And if you guys didn't know, you are on the TrendSpider YouTube channel. TrendSpider is, in my opinion, the leader in AI features when it comes to analyzing the stock market. You can sign up and get a paid trial of the platform. Just go to trendspider.com. You can try out the platform for just like 19 bucks today and test all these features out for yourself. I mean, Sidekick alone is honestly amazing. I'm using it to analyze all these earnings in real time. So if you guys do not have access to this, you are absolutely missing out. But let's see what's happening on which stock. NXT. So again, you can see quarter 3, 2026. What is this? EPS 110 versus the 93-cent estimate. Massive beat here on EPS. It says EPS analysis, strong beat versus the estimates, and modest year-over-year growth, slowing from the quarter 4, quarter 1 surge. But again, it's still a massive beat year-over-year and against the estimates. And same with revenue. Excellent revenue growth. It's like massive 34% year-over-year revenue growth. That's a beautiful chart. That's exactly what you want to see. And also, fiscal year 2026 guidance raised. Adjusted EPS, was expected to come in at 4.25, and they guided at 4.26 to 4.36, which is above the estimates. And revenue is pretty much in line. They had a 3.44 estimate, and it came at 342 to 350. So yeah, pretty much in line, but overall positive guidance raise. And Sidekick giving NXT the buy rating. Rationale: NXT delivered exceptional Q3 results with double-digit beats on both EPS and revenue, raised guidance above estimates. And they also have a record backlog, global leadership, and then obviously a strategic pivot to recurring AI/robotics revenue justify the premium. But it does say long-term solar megatrend remains intact. And that is for NXT, you guys. Looks absolutely insane. Beautiful, beautiful setup right here. Yeah, very nice results. Is there anything else that you guys are seeing out there that maybe I have not taken a look at? I did see someone mention LRCX in the chat. Let's take a look at Lam Research. It is looking beautiful on the day. Looks like it just hit a new all-time high. Absolutely insane. And yeah, their earnings will be tomorrow after the market closes. Also, PT Griffin, I do appreciate that. make sure to subscribe and come back for the next live tomorrow. We're going to be live like all day tomorrow, you guys. We have an FOMC and then earnings right after it. So it's going to be a crazy day. Someone said GLW. Somebody asked, is Sidekick useful for Iron Condor guidance pertaining to earnings plays? You know, I would say right now. So here's what I'll say. We're actually working on getting full options data built into the platform. So absolutely, Sidekick will be an insanely good resource for analyzing all types of different things regarding options in the near future. I can't say exactly when. I don't even know exactly when it's going to come out, but it is soon. It is the next update we are working on. So yes, stick around for that. GLW. This is Corning Incorporated. They have earnings tomorrow pre-market. Wow, look at that. Absolutely insane move to the upside here on GLW. What is going on GLW? And somebody is asking, any reason STX is down? Let me pull up STX again and see where we're at in real time here. Yeah, STX is continuing its grind lower, down about 2.7%. But STX had a good report, you guys. Yeah, tomorrow's gonna be absolutely insane. Make sure you guys tune in to my to our live tomorrow. But let's take a look at STX earnings and we'll see exactly what happened. For whoever asked, it was pajama trading. Here is what happened with STX. These green bars right here are the revenue and EPS announcements made possible by Sidekick AI. And you can see they beat both the prior year and the estimates. So double beat. Forward guidance was good, except for revenue was in line, which is still good. It's not bad, it's not down, but EPS 60% year-over-year growth in the forward guidance, which is nice. But here's the bear case for anyone wondering potentially why it went down. For one, of course, trading at premium multiples. It's a growth stock. That is, wouldn't say the worst thing ever. And it says no unit capacity expansion. It says it's relying purely on aerial density gains, supply bottleneck risk if hammer yields disappoint. Let's see. Yeah, overall, you guys, we begin multiple recent analyst upgrades here on STX. Obviously, strong positioning in the storage play, the memory play. Apparently, Trump tariffs on South Korea creating a memory chip supply. Oh yeah, the memory chip supply concerns could benefit STX. That's the same story again with MU and SanDisk. So overall, it was a great report. And sometimes earnings just end up being like that. It came in great, but the stock still comes down. It's only down 2.7%. Yes, Vinji, we're going to be live all day tomorrow, starting when the FOMC announcement hits, the rate cut decision at 2 p.m. Eastern. And the live is going to continue all the way till like now, till after hours earnings. So yeah, I won't be eating much tomorrow. So definitely make sure to like and subscribe so you guys can tune in for that. Oh. Let's see. Yeah, absolutely going to be crazy tomorrow. And let me take a look at the STX investor relations page, and we can see if I can get the earnings call stream for you guys. If you guys are interested in hearing an earnings call, do let me know down in the chat below. If nobody wants it, I will not stream it. That's fine. Yeah, I just pulled it up right here for the earnings call. The earnings call is scheduled to start in about 30 minutes. So if you guys want me to stream the STX earnings call, do let me know in the chat down below, and I can do so. Oh, the TXN earnings call. I can also stream the TXN earnings call if you guys wish. Obviously, I wish I could stream all of them, but I can only stream one. see if I can find it. I've been having a weird time finding. Well, it's not till 3:30 p.m. Central, which is 2:30. Yeah, the TXN earnings call doesn't start until a whole nother hour. So I might do the STX earnings call. The earnings call absolutely can change the trajectory of the stock. But I'll probably do STX if stream the STX call out of the two, you guys. But TXN, I mean, if you're holding this one, you guys are sitting very nicely up right now. All right, let's see here. And I'm just going to show you guys a quick thing that you can do in the AI market scanner here on TrendSpider. Find stocks with earnings over the next 3 days. So if you guys want to find stocks with earnings over the next week or 3 days or whatever it is for this week, obviously there's a ton this week. I'm just going to open the AI market scanner and type this prompt in right here. Click find symbols now. Let it do its thing. And then we're going to find out all the stocks that are going to be reporting earnings over the next 3 days. And as you can see, it pulled them all up right here. We have so many stocks, guys. Obviously, Tesla, we're going to be covering this one tomorrow. We got Meta and Microsoft. We got LMT reporting. That should be a crazy one. Let's go back to the daily chart. LMT is reporting on the 29th. We got Apple. Some of the biggest companies in the world, you guys, are reporting this week. And we have FOMC, so be prepared. Make sure you turn into the stream so you can see it all unfold in real time with us. We got ExxonMobil, XOM reporting this week as well on the 30th. Pre-market on the 30th, I believe that is pre-market earnings. But CLS, someone is saying CLS, yeah, is tomorrow after the market closes. So I will be live tomorrow again at the same time for these earnings announcements, you guys. So that is that. So let me see what is leading the day in the sector ETFs again. Wow, it looks like semiconductors SMH ETF overtook gold for the day. But silver is the absolute king still, everybody. Silver is the absolute king. Is trending absolutely insanely nice. And healthcare has been really back and forth lately. It is down again today. But it still continues to put in these higher lows. So maybe that will continue. Maybe it's a good buy the dip opportunity, or maybe it's the end. You never know. TX earnings started a minute ago. I thought TXN earnings I just saw will be at 3:30 p.m. Central Time. Oh, no, you're right. TXN is, I'm getting my timing mixed up. I'm looking at the TXN earnings call right now for you guys. All I'm hearing is music, though. Yeah, so I'm not sure. Oh, this is a different call. The TXN call is like hidden somewhere, you guys. I don't know where it is, to be honest with you. But we definitely can get Seagate STX earnings call live for you in about 27 minutes. So if you guys have any questions about the market, the TrendSpider platform, Sidekick, anything, let me know down in the chat below. But it looks like we're probably going to stream the STX call. That is one of the biggest ones that was out today, of course. Take a look at what the stock is doing in the aftermarket session here again. Yeah, it's actually came back up since that dip, you guys. It closed right around 372. Closed, yeah, 372 and 43 cents, and it's trading just a little bit lower there at 368, down 1% from the close. And pretty soon, in about 30 minutes, we are going to get the earnings call. BA also recently reported their earnings. I believe it was this morning, you guys. Pretty wild movement. It moved down in the pre-market session, then had a massive rally to the upside right here. Let me go ahead and plot the major market news on my open BA chart. So I just asked Sidekick right now, you guys. This is one of my favorite use cases of Sidekick. All you have to do is say, plot the major market news on any chart that you have open. I put my BA chart, since right now it has this kind of crazy price action. I just want to know exactly what is going on and see if there's any major moves driving this. And it was pretty much all the Q4 earnings being released right here in the morning, right around 10:55 Eastern is when all this movement happened, and it was the Q4 earnings. And then it looks like the CEO came on to CNBC right here when it started tanking. So a very easy way to plot major market news events right on your chart directly, guys. I mean, looking at all the articles in hindsight and trying to plot exactly what moved everything on your chart is a pretty time-consuming thing, and Sidekick is actually very good at doing it for you. So definitely be sure to check it out. Helps me out a ton, that's for sure. And let's see. Let's go back to STX over here. STX, yeah, pretty much barely up from yesterday's close, as you can see right here. Closed yesterday right around, let's turn off this aftermarket data. It closed around 371.76 today. Or was it 358.29 the day prior? And now we're sitting at 367. So just up slightly. Kind of like a fake out breakout right here, you guys. You can see we hit these new all-time highs and then got whipped out here on the daily chart, and the price did indeed come back down on STX. So yeah, I mean, it's up a ton. I mean, if you look at how much it's up over the last, almost a year at this point. The April low was obviously the bottom, as it was on many things, but it's up nearly 500%, you guys, in less than a year. So anytime a stock is moving that crazy, I'm not saying it's going to stop moving. I mean, you could have said the same thing about that here at 200%, at 300%, 350%, all the way to 500 now at 480. So you never know how big these trends will be, but you definitely want to make sure you get out of them before it starts reverting all of your gains. Let's see. See what TXN is doing here, because the earnings call for TXN, I believe, is live right now, but it doesn't seem like TXN is moving much, if at all, on the earnings call that is currently live. So let me go in. Let's do a quick market recap of all the news. Summarize all of the market news from today. What is driving the markets? So let me do a basic prompt there to analyze all the news from the stock market today. If you guys didn't see, this SPY did hit a new all-time high today. Didn't last for very long up there, but it did indeed make that new all-time high. And so we'll take a look and see what is driving that, if there is anything driving that, in our news feed, all analyzed by Sidekick. Zoom in a little bit here for you guys. So based on today's news flow, here's the main themes. Healthcare sector was down, as we noted earlier. UNH was down 20% after their earnings. Of course, we took a look at that earlier. And apparently this is hitting other insurers. Yes, CVS was another big one that is down today, all trading lower on insurer sentiment concerns. CLOV, haven't really seen this one in quite a while. CLOV. This is Clover Health, one of the more speculative healthcare plays. Yeah, been in a pretty nasty downtrend for a while there. And if you pull up, was it CVS? You can see this one had a pretty nasty down day as well, caused by this UNH earnings report mostly. Tech earnings are a mixed picture, it's saying. STX again performed well. TXN missed, but the shares went up on strong guidance. It says crypto crossed above 90K, but remains under pressure, as true. Gold and silver, of course, hitting all-time highs. Of course. Looks like Kathy Woods attributes Bitcoin pullback to What is this? Binance deleveraging event. So I guess there's a Binance deleveraging event. Interesting stuff there. Corporate activity. It's like CRM, Salesforce, won a $5.6 billion Army contract. Take a look at CRM on the day. Yeah, CRM had a nice pop, probably on that news right here in the morning, but ultimately gave it all back as the day progressed. Meta is facing allegations about chatbot safety for minors. Not sure why only Meta would be facing that. That's interesting. A couple merger approvals, earnings season in full swing. But yeah, absolutely the biggest story today was the UnitedHealth earnings shock, causing it to drop 20% and also causing CVS to drop quite a bit. Someone saying now ER tomorrow. What do y'all think it's going to do? Let's see. Do you see any of them rebound tomorrow being oversold? That I'm not sure. We haven't even seen the earnings call quite yet. Josh Mears says, Mike, you look more clever than the last stream I was on. Well, thanks, I guess. What was the last stream you were on? Someone's asking about now earnings in the chat, which, yes, is reporting tomorrow in the post-market session. And let's go ahead and use Sidekick to take a look at what is going on for now, NOW. I'm going to plot this here and change this from TXN to now. A guy was claiming to be a guru, but his portfolio was 100% GME. I do not recall. Who did I have on that was 100% in GME? I think you're getting me confused with like that Roaring Kitty guy. But yeah, I'm analyzing now NOW using Sidekick because they do report earnings tomorrow, and we're going to see what Sidekick has to say for you, John's peers. One. Yeah, I have no idea, Josh, who that was, if I'm being completely honest with you. I do not live in Texas. I live in like the complete opposite of Texas. I live in California. Let's see. All right, here's the now upcoming earnings analysis brought to you by TrendSpider Sidekick AI. So let's see, the estimated EPS for Q4 2025 is right here in this yellow. Let me see here. That was like the last 3 quarters. So yeah, that's kind of useful. Let's take a look down here. NOW, looks like there's an OpenAI partnership. There's a 3-year deal to embed GPT-powered AI agents into enterprise workflows. That is interesting. Price target cuts for NOW. Multiple analysts lowered PTs. That's not a good sign going into earnings. Apparently, someone from CNBC, Malcolm Etheridge, I'm not a big CNBC watcher, bought more now on about 6 days ago on the 21st. Let's see. The bull case has got this OpenAI partnership catalyst. Of course, everyone loves an OpenAI partnership. At least they loved it a lot more back in the day before, it tanked Oracle. Consistent beats, 3 straight quarters of massive EPS beats, revenue up pretty good, EPS. So, earnings, revenue, and EPS moving up. Always obviously a good sign. And Sidekick's overall take those hold. It says don't buy before earnings. It says while now has crushed the estimates recently, the expected year-over-year EPS decline and 30% stock drops suggests guidance disappointment risk. Is there a 30% drop here on NO? Yeah, it's looking pretty brutal on the chart, you guys. Look at NOW here. It is down, 45% from the highs, which is interesting. It's trading right around this key pivot level. Will be a fun earnings report to watch. Josh, yeah, I do like Cali. I grew up here all my life. lived in Chicago for a few years and now I'm back. Yeah, I do enjoy Cali. I do not like the taxes though. Yeah, Oracle. Let's take a look at Oracle, you guys, because yeah, a lot of people were talking about Oracle around this pivot level right here, if you remember. And it seems like it's not holding that level very well, is it? So yeah, not the greatest look there on Oracle. Someone asked if I see pins down. I don't really watch pins like that. Wow, Pinterest. Yeah, pins is Pinterest. I'm gonna remove all of this here. Pinterest looks terrible, you guys. I'm not gonna lie to you. What was the news? You say with the rest that going to lay off 15% of the workforce. That's interesting. Yeah, so pins looking good. I saw Reddit dump the other day. You know, Reddit was seeming to trend pretty well. It was basing up here, still kind of in this consolidation area, but yeah, when it tried to break up out of this pivot, it completely failed and went down. If you look at the daily chart here, Reddit did get a nice little spike, you know, nice gap to the downside this morning as well. Yeah, pretty nasty Reddit dump. And there's not much news to go on. I was looking into the Reddit news earlier. It is a stock that I do personally watch. Not in it anymore. I didn't really see a whole lot going on Reddit. Maybe it has something to do with this Pinterest drop. Yeah, which is a restructuring plan that includes a 15% workforce reduction, which is interesting because I feel like back in the day, you know, when these layoffs are being announced, the stock would move up because they're, you know, saving money, but apparently not for pins. Let's take a look again at STX, put on our after hours data. So yeah, it's just chilling here still, you guys. Not really nothing crazy here on STX. The report was great though. If you guys are just joining in, STX, amazing earnings report. And it's, you know, down a little bit in the after hours session. So that's why earnings are, you know, sometimes just a gamble. You never know what is going to happen. If you guys have just joined in though, make sure to like and subscribe. We will be streaming the STX earnings call here pretty soon when it starts in about 14 minutes. But until then, let me know what questions that you guys have. Let me mute that audio. Yeah, someone brought up Tiger, that brokerage, the other day on one of these lives. Didn't really look much into it. Take a look at the weekly chart right here. As you can see, it had a massive, massive breakout out of this pivot level right here at around $5, $6 or so. And it broke out. How much was that up? Wow, went up 150% from that breakout level and then gave it all back and bounced off of that pivot again. So you guys, if you guys, you know, are not on TrendSpider yet or not charting, you don't know about technical analysis, absolutely go to TrendSpider.com and grab your guys' selves a trial of the platform. It starts at $19 to try out this platform for just a couple of weeks. Because technical analysis is incredibly important if you're in the stock market. You cannot just be guessing. And these levels do work, you guys. Like horizontal levels like this, you know, the market remembers this stuff. Like you guys got to have these key points on your chart. And if you don't, you're trading blind. So you need a platform like TrendSpider, at least some sort of charting platform to help you guys decide, you know, what is good to trade, where to manage your risk and all of that stuff. But yeah, I mean, if I was in TIGR, how much, let's use our position tool. This is a really cool tool that I like to use here on TrendSpider. And just draw this position tool right here. You can set your stop, I don't know, like maybe under this low, that's a 15% stop loss. Then maybe your profit target is there. That reward to risk ratio on this specific trade, if you literally set a stop there and take profit there and bought here, would be 3.59, which is pretty good. 40, yes, this is not a free platform. So yeah, it is not a free platform, but you can get a trial of the platform for 14 days. And if you guys are just curious, you like enjoy seeing this analysis, make sure to like and subscribe, and at least subscribe to the channel so you guys can see the platform in action all the time and with like real events here. Yeah, you guys can ask any questions you want down below. Someone's talking about the IREN breakout. Not exactly sure which breakout you are referring to. Again, you did see these 2021 highs breakout there. And it's been some interesting movements since. So maybe it was that breakout you're referring to. I guess you can consider this week a breakout candle as well. Yeah, if you can see right here, I guess maybe today's breakout, they did close above, this pivot level here, which is, a pretty strong sign. Again, this is a very speculative, or I should say very volatile stock. I mean, from the highs that we've seen it drop 60, almost 60%, you guys. So you got to be careful with companies like these and where you set your stops, because it is incredibly easy to get wicked out. Size your positions accordingly based on the volatility of the stock. Somebody said on TIGR, they had a report saying lots of upside on January 22nd. Why did you choose the last name? Well, I didn't choose my last name, actually. But, yeah. Maybe I'll change it one day. Who knows? But I didn't personally pick my last name. Did you pick your last name? Mike? Let's see. But yeah, recently IREN did have an EPS, went from negative to positive, which means it became profitable, which is always good to see. Yeah, pretty fun momentum stock here, you guys. Let's look at the relative performance. If you guys didn't know, relative performance is a indicator here on TrendSpider. And what it does is compares any stock to an index such as the S&P 500. And if we do use it to compare it to the S&P 500, you can see it's at 99.8 right now, which means it is literally outperforming 99.8% of the S&P 500. And we got about 9 minutes until this STX earnings call does go live. So let me know if you guys have any more questions in the chats below before we turn on that earnings call for everybody. Josh, here, let me see. No, I don't really like to show my positions because now everything in here is going to get destroyed. But here's my personal TrendSpider account. Here's some of the stocks I have. Yes, it is pretty big right now. I'm working on reducing the number of holdings in my portfolio, but here's some stuff that I have right now. Do have a custom indicator here on TrendSpider that is not really public right now. APH was a really good one for me today. I've been in this one forever. I'm more of a swing trader. I don't really day trade. As you can see, I got in here in June. APH just hit another new high today. Yes, I did buy silver recently on this day. Yes, I'm an idiot, but also my 20% trailing stop is in profit now, so whatever. I'm in DigitalOcean, which has been absolutely crushing it lately. I'm in SanDisk, also been crushing it lately, so that's why I want to see these STX earnings. What else do I got? Compass, COMP was a good one. Are you talking about Ross? Yeah, I got in back here on this power earnings gap, I think, after earnings, and I've just been holding since. It's not really something I care about too much. Yeah, I need to clear out some positions and really kind of narrow these down. But yeah, that's what I got. Here's my multi-symbol view here. Wow, TXN looking really good in after hours. NXT barely even has candles at this point, and STX right over here. Again, still sitting pretty much flat. But yeah, to answer your question about ROST, the XRT ETF at one point was doing pretty well. And so I was looking at the top performing stocks in the index. I don't know if it's still, let's take a look. ROST, relative performance. Yeah, so the relative performance, I'm mostly scanning using relative performance or like the chats or like rate of change to see the stocks that are really trending right now. Honestly, I don't know my, most of these are pretty equally sized, but I think I did add some to APH. That's one of my bigger ones. Forget what else. GH. Honestly, guys, I've automated my trading pretty well these days. I don't even have my broker open sometimes just because I literally just automate it with Signal Stack. I just buy and then use my trailing stops and use Signal Stack to exit for me. So it's pretty easy, chill way to trade because I'm just pretty busy during the day. Let's see, we got about 5 minutes until earnings call. Yeah, I don't like to as you can see, I have a pretty big portfolio right now, so I don't like to like really, pick like 1, 2, 3 names that I think are going to be crazy. I think everything just moves in cycles, and I just try to hop on the cycles while they're there. So I don't really get too emotionally invested into anything. Return with Signal Stack. I mean, I wouldn't attribute my gains to Signal Stack. It's just the way I use to do my exits. But I'm doing pretty well for the start of the year for 2026. Last year, I think I about matched the SPY. I don't shoot for crazy gains. But this year, I'm actually outperforming the SPY quite a bit so far. I have to recheck again on my journal, but it's been a good year. I think last time I checked, I was up like 8 or 9% in 2026 so far. Let's see. OKLO bounce here. Let's take a look. I think OKLO is dead money in my opinion, at least for now. I mean, this is not a setup that I like to trade personally. I like to buy stuff. Sounds dumb, but on the way up, I like to follow the trends. And right now, this one is just, it's looking like it's more of a downtrend to me. Any thoughts? So yeah, on a bounce, I mean, it definitely could, like a counter trend trade. But that's, I don't really have a strong opinion on that. Let me see. Let's put up the 200 SMA because I did see on my chart here. Yeah, there is a 200 SMA that it's sitting on top of. So I guess you have a pretty low risk entry if you wanted to play for a bounce here. Josh, I don't know what you're talking about, man, at this point. You're funny, man. Let's see. Do you think that you should sell DocN tomorrow or after tomorrow's highs? I won't be. I'm going to ride this thing up to my trailing stop hits. Which is right there at 51.27 for me personally. I like to give my stock some room to breathe. You know what I mean? Could sell into strength. I've been considering, trimming some stocks, but it's not really how I back tested my strategy. So yeah, of course. No problem, you guys. We got 2 minutes till this earnings call. Let's take a look and see if they've started yet. Nope, just music in the background still. Reminds me, I'm going to turn off my lo-fi music here in preparation for that. Let's see. VRT. I've heard this name a few times for sure. Looking pretty good on the weekly, honestly. It looks like it's setting up a nice consolidation base right here. Yeah, VRT is not too bad. When's their earnings? Got earnings here February 11th in the pre-market session, so we got a couple weeks. Josh, you are cracking me up, man. Let's see. VRT. I'll have to take a look at this on my my personal account real quick. That's interesting. So these breakouts just didn't have enough volume for me. If I was to get into VRT, it would have been over here on these breakouts to the upside. These you could play, but they're just not meeting all of my filters. So someone said Dock-in has a what? A black candle? Yeah, that's what you call black candle. It was an interesting candle today for sure. What ticker is VRT? I mean, the ticker is VRT. The stock is Vertiv Holdings, LLC. Let's see. I am probably going to put up the STX earnings call and get that thing going live. I think it should be starting any second here. It's not started yet, but it just struck the starting time for the STX earnings call. Let me know if you guys can hear that music in the background. If so, that means you will be able to hear the earnings live stream. What do I do for work? This is my work right now, man. Do the YouTube here for TrendSpider. I'm in marketing for TrendSpider.
Welcome to the Seagate Technology
And here is the earnings
second
call.
quarter 2026 conference call. All participants will be in a listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key
hear that
followed
call?
by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on a touch-tone phone. To withdraw your question, please press star, then 2. Please note, this event is being recorded. I would now like to turn the conference over to Shani Hudson, Senior Vice President, Investor Relations. Please go ahead.
Thank you, and hello, everyone. Welcome to today's call. Joining me are Dave Mosley, Seagate's Chair and Chief Executive Officer,
Here's the
and
call,
Gianluca
everybody.
Romano,
This
our
is for
Chief Financial
STX.
Officer. We've posted our earnings press release and detailed supplemental information for our December quarter results on the investors section of our website. During today's call, we'll refer to GAAP and non-GAAP measures. Non-GAAP figures are reconciled to GAAP figures in the earnings press release posted on our website and included on our Form 8K. We've not reconciled certain non-GAAP outlook measures because material items that may impact these measures are out of our control and/or cannot be reasonably predicted. Therefore, a reconciliation to corresponding GAAP measures is not available without unreasonable effort. Before we begin, I'd like to remind you that today's call contains forward-looking statements that reflect management's current views and assumptions based on information available to us as of today. They should not be relied upon as of any subsequent date. Actual results may differ materially from those contained in or implied by these forward-looking statements, as are subject to risks and uncertainties associated with our business. To learn more about these risks, uncertainties, and other factors that may affect our future business results, please refer to the press release issued today and our SEC filings, including our most recent annual report on Form 10-K and quarterly report on Form 10-Q, as well as the supplemental information, all of which may be found on the investors section of our website. Following our prepared remarks, we'll open the call up for questions. In order to provide all analysts with the opportunity to participate, we thank you in advance for asking one primary question and then re-entering the queue. With that, I'll turn the call over to you, Dave.
Thanks, Shani, and hello, everyone. Seagate closed out calendar 2025 with a record-breaking quarter driven by sequential revenue growth across nearly all end markets. December quarter financial results exceeded both top and bottom line expectations and set new company records for exabyte shipments, gross margin, operating margin, and non-GAAP earnings per share. We expanded non-GAAP gross margin above 42%, supported by the execution of our pricing strategy, along with an improving mix of our high-capacity drives as HAMR shipments ramp. Looking at the entire calendar year, 2025 marked a transformational period for Seagate, both financially and operationally. Over the calendar year, we increased revenue by over 25%, improved gross margins by nearly 740 basis points, and expanded operating margins by an even greater amount, demonstrating the profitability leverage in our financial model. 2025 also solidified HAMR technology as a long-term enabler of mass capacity storage. We entered the year shipping 3 terabyte per disk Mosaic-based HAMR products to our first CSP customer, and by year's end, quarterly HAMR shipments exceeded 1.5 million units and have continued to ramp. Mosaic 3 HAMR drives are now qualified with all of the major US CSP customers, and qualifications for our second generation Mosaic 4 terabyte per disk products are tracking well to plan. These developments align with our long-term areal density roadmap that extends to 10 terabytes per disk, which we expect to deliver early in the next decade. I want to thank our Seagate teams around the world for exceeding our performance expectations and delivering outstanding value to our global customers. We continue to operate in an exceptionally strong demand environment, particularly within the data center end markets. In the December quarter, we saw sustained demand growth for our high-capacity nearline drives across global cloud data centers, as well as continued improvement from the enterprise edge. Based on our build-to-order pipeline, we anticipate these positive demand trends will continue for some time. Our nearline capacity is fully allocated through calendar year 2026, and we expect to begin accepting orders for the first half of calendar year 2027 in the coming months. Further out, demand visibility is strengthening based on the long-term agreements in place with major cloud customers through calendar 27. Additionally, multiple cloud customers are discussing their demand growth projections for calendar 28, underscoring that supply assurance remains their highest priority. We will continue to meet strengthening demand through our strategy to maintain supply discipline and satisfy exabyte growth through areal density and advancements and without increasing unit production volume. In the December quarter, our average nearline drive capacities rose by 22% year over year, approaching 23 terabytes per drive, with those sold to cloud customers averaging significantly higher. This trend underscores the strong adoption of our higher capacity drives to support demand growth. At the same time, revenue per terabyte sold has remained relatively stable, reflecting the effectiveness of our pricing strategy. Seagate is well positioned to continue benefiting from the combination of powerful secular tailwinds and supply discipline. Video applications continue to drive significant demand for hard drives, with platforms like YouTube witnessing 20 million video uploads daily, up from just 2 million 3 years ago. This staggering pace of growth extends to other cloud video platforms and doesn't yet include the full surge in content generation expected from emerging AI-driven video applications. These applications are not only fueling social media uploads, but are also transforming how organizations turn their data into tangible value, enabling personalized marketing, interactive education, and advanced simulations capable of training manufacturing, engineering, healthcare, and other professionals. The strategic value of data is further underscored as new applications and use cases emerge across cloud and edge workloads. Among the most promising of these is agentic AI, which relies on persistent access to large volumes of historic data to enable effective planning, reasoning, and independent decision-making. Adoption is already gaining momentum, with one recent survey conducted by a leading cloud service provider reporting more than half of participating customers were actively using AI agents. Early adopters are already realizing measurable returns, with benefits ranging from lower costs to increased revenue opportunities. With the deployment of AI agents at the edge, where untapped data often resides, we believe the stage is set for a sustained and meaningful increase in data generated and stored that will support inferencing, continuous training, and also maintain model integrity. Modern data centers have evolved to address the complexity and scale that massive workloads bring through sophisticated data tiering architectures, ensuring that the right data is available at the right time and place. Hard drives are essential to these architectures, anchoring the mass capacity data tier that stores the vast majority of exabytes, from storing the checkpoint data sets used to train and maintain model integrity to supporting vector databases that provide the context necessary for accurate inference results and agentic AI performance. By leveraging hard drives, data center operators, whether in the cloud or on-prem, can achieve the optimal balance of performance, capacity, and cost efficiency at scale. Against this transformational backdrop, Seagate's HAMR technology roadmap positions us to meet growing demand and deliver ongoing TCO improvement for our customers. HAMR is a proven technology with large volumes of drives running in cloud production environments for more than 3 quarters now and performing well across a broad spectrum of use cases. We are systematically ramping our Mosaic 3 HAMR products to qualified customers while maintaining focus on optimizing the profitability of our available supply. As noted earlier, Mosaic 3 is now qualified with all major US CSP customers and remains on track to have all global CSPs qualified within the first half of calendar 2026. Additionally, qualifications of our second generation Mosaic 4 products are progressing well. We expect to begin the ramp of Mosaic 4 later this quarter and have multiple CSPs qualified in the coming months, in line with our plans. We continue to set the pace for the industry, recently demonstrating 7 terabytes per disk capability in our labs. As one of our largest CSP customers recently aptly described, hard drives are engineering marvels, a sentiment that we obviously share. Our deep expertise across mechanical engineering, material science, nanoscale fabrication, and now advanced photonics not only enables Seagate to deliver on the HAMR roadmap, but also creates a durable competitive moat for hard drive technology well into the future. Wrapping up, 2025 was a milestone year for Seagate in every respect: financial performance, operational execution, and technology leadership. We are carrying this momentum into calendar 2026, supported by a powerful demand backdrop as new AI applications start to complement traditional workloads. We will remain highly disciplined and focus on expanding profitability through our higher capacity product mix, underpinned by the strong economics of HAMR. Our areal density roadmap positions Seagate to sustain the core TCO and efficiency advantages of hard drives as data creation and storage requirements accelerate in the AI era. We believe this foundation creates a compelling long-term value proposition for the company, our customers, and our shareholders. I'll now turn the call over to Gianluca to cover our results in greater detail.
Thank you, Dave. Seagate delivered another quarter of strong year-over-year revenue growth and set new record profitability metrics in the December quarter, underscoring the durability of data center demand trends. Additionally, we strengthened our financial position by retiring $500 million in gross debt and generating over $600 million in free cash flow, marking the highest level in 8 years. December quarter revenue came in at $2.83 billion, up 7% sequentially and up 22% year-over-year. We achieved non-GAAP gross margin of 42.2%, up 210 basis points sequentially, and we expanded non-GAAP operating margin by 290 basis points sequentially to 31.9%. Our resulting non-GAAP EPS was $3.11, up 19% quarter-over-quarter. These strong financial results demonstrate our ability to execute our strategic objectives, including leveraging our technology roadmap to support demand growth. To that end, we shipped 190 exabytes in the December quarter, up 26% year-over-year, while keeping overall unit capacity relatively flat. The data center market accounted for 87% of our shipment volume, supported by ongoing demand momentum from global cloud customers and sequential growth across the enterprise OEM market. We shipped 165 exabytes in the data center market, up 4% sequentially and 31% year-on-year. Data center revenue grew at roughly the same pace, totaling $2.2 billion for the quarter, up 5% sequentially and 28% year-on-year. Against this strong demand backdrop, both cloud and enterprise customers are transitioning to higher capacity drives. Average cloud nearline capacity increased to nearly 26 terabytes in the December quarter and will continue to grow with the ramp of HAMR-based Mosaic products. As Dave highlighted, Mosaic drives are running very well in production environment and meeting all performance, reliability, and integration expectations. In the enterprise OEM market, we are benefiting from slight improvement in traditional server units, along with increasing demand for storage servers, driven in large part by the adoption of AI applications and need to store data at the enterprise edge. The edge IoT market made up the remaining 21% of revenue at $601 million, supported by anticipated seasonal improvement for consumer products and the VIA client market. We project the broader VIA market to grow over time, with the largest growth contribution coming from VIA nearline products that are captured as part of our data center end market. Moving on to the rest of the income statement, non-GAAP gross profit increased to $1.2 billion, up 13% quarter-over-quarter and 44% compared with the prior year period, significantly outpacing revenue growth. Non-GAAP gross margin expanded to 42.2% in the December quarter, up from 40.1% in the prior period. This improvement reflects the ongoing execution of our pricing strategy and the growing adoption of our latest generation high-capacity products, which collectively drove a modest sequential increase in revenue per terabyte, a trend we expect to continue into the March quarter. Non-GAAP operating expenses were $290 million, relatively flat quarter-over-quarter and in line with our expectations. Operating expense as a percent of revenue declined to 10.3%, rapidly trending towards our long-term target of 10%. The combination of strong top-line growth and significant financial leverage drove an 18% sequential improvement in non-GAAP operating profit to $901 million, almost 32% of revenue. Other income and expenses were $70 million, reflecting slightly lower interest expenses on the reduced outstanding debt balance. We currently project other income and expenses to remain relatively flat in the March quarter. We grew non-GAAP net income to $702 million, with corresponding non-GAAP EPS of $3.11 per share, based on tax expenses of $129 million and a diluted share count of approximately 226 million shares, including the net impact of our 2028 convertible notes. Turning now to cash flow and the balance sheet, we invested $116 million in capital expenditures for the December quarter, or roughly 4% of revenue. We are maintaining capital discipline while we continue to transition and ramp HAMR technology. To support these objectives, we anticipate capital expenditures for fiscal year 2026 to be inside our target range of 4 to 6% of revenue. Free cash flow generation was strong at $607 million, up 42% from the prior quarter. Looking ahead, we expect free cash flow generation to further expand in the March quarter, supported by sustained demand trends, operational efficiencies, and capital discipline. These factors position us well for durable, long-term cash flow generation. Cash and cash equivalents totaled just over $1 billion at the end of December quarter, with ample liquidity of $2.3 billion, including our undrawn revolving credit facility. During the December quarter, we returned $154 million to shareholders through dividends. We retired approximately $500 million of exchangeable senior notes due 2028, which serves to limit further dilutive impact from these notes and optimize cash deployed for future share repurchases. Our resulting gross debt balance was approximately $4.5 billion exiting the quarter. Net leverage ratio improved to 1.1 times, based on adjusted EBITDA of $962 million for the December quarter, up 16% quarter-over-quarter and up 63% year-on-year. We expect the net leverage ratio will trend lower as profitability and cash generation increase, while we continue to evaluate opportunities to further reduce debt. Turning now to the March quarter outlook, the demand environment remains strong, particularly among global cloud customers. As a result, we expect data center demand will more than offset typical March quarter seasonality in the edge IoT market. We expect March quarter revenue to be in a range of $2.9 billion plus or minus $100 million, which represents a 34% year-over-year improvement as a midpoint. Non-GAAP operating expenses are expected to be approximately $290 million. Based on the midpoint of our revenue guidance, non-GAAP operating margin is expected to approach the mid-30% range. Non-GAAP EPS is expected to be $3.40 plus or minus 20 cents, based on a tax rate of about 16% and non-GAAP diluted share count of 230 million shares, including estimated dilution from our 2028 convertible notes of approximately 7.6 million shares. Seagate's strong December quarter performance and March quarter guidance underscore our continued focus on driving growth, enhancing profitability, and optimizing cash generation. Based on our current outlook, we expect to deliver sequential improvement to both the top and bottom line throughout calendar 2026 and remain in a strong position to enhance value for both customers and shareholders over the long term. Operator, let's open the call up for questions.
Thank you. We will now begin the question and answer session. To ask a question, you may press star, then one on your telephone keypad. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star, then two. In the interest of time, we ask that you limit yourself to one question. If you have further questions, you may re-enter the question queue. Once again, that was star, then one to ask a question. At this time, we will pause momentarily to assemble our roster. And the first question today will come from C.J. Muse with Cantor Fitzgerald. Please go ahead.
Yeah, good afternoon. Thank you for taking the question. Given the supply-demand dynamics, you're obviously in the catbird seat and wanted to really try to get some more detail on gross margins going forward. Your philosophy historically has been to share the gains, both your customers and yourselves. But at the same time, given this tight environment, you are raising like-for-like pricing. So curious, is there a framework to think about in terms of the incremental gross margins that we should model from here? And then I guess maybe bigger picture, as you think about overall average pricing per exabyte, we've gone from kind of down double digits to high single digits, and I think we just exited the quarter down 4% year on year. Do you see a world where, pricing, could flat or even move positive year over year? Thanks so much.
Yeah, thanks, CJ. I'll let Gianluca chime in here as well, but the pricing will be dictated by the demand. Right now, the demand is really strong. So I think as we roll through into 27 and 28, we look at how much capacity we're having. We're bringing online by virtue of the fact that we're making all these aggressive product transitions. We'll bring more exabytes to bear, and then people go out there and renegotiate for those. I think flat to slightly up is certainly possible, and that's the way we're really managing it as we talk to our customers. The value proposition of the new drives as they go up 5-10 terabytes at a time is pretty strong.
Hey, CJ. So on the gross margin, we are executing very well. We're executing a little bit better than what we discussed at our investor day, where we presented a model with a 50% incremental margin above a $2.6 billion of revenue. We have done better every quarter. Of course, is our objective to continue to optimize what we produce, what we sell, and finally the profitability that we can get from the product. So the model covers over a longer period of time, now 2-3 years, not 2 or 3 quarters, but I'm positive we are continuing to progress in the right direction.
Thank you.
Thanks, CJ.
The next question will come from Wamsi Mohan with Bank of America. Please go ahead.
Yes, thank you. I have a similar type of question. I guess the gross margins in the guide and the incremental quarter-on-quarter gross margins in the guide are very strong. Can you maybe help bridge the drivers between mix and price? Obviously, you've got better mix of data center revenue next quarter, but just wondering if you can dimensionalize that. And the opportunity for pricing, Dave, you just said sort of flat to up as possible. But as we think about the pricing that might be getting embedded within these LTAs and sort of beyond 26, why can't that be a lot higher just given the tightness in the supply-demand environment? Thank you.
Yeah, I think this gets into how persistent is the demand going to be, Wamsi. We talk about 2 or 3 years from now. The one behavior change that I really like in the last year is that people are starting to say, if I can't get it now, I'll plan next year better and the following year better. So we're having great dialogues on that front. Of course, supply has risen quite a bit in the last year, supply of exabytes from the industry. The industry's reacted pretty well, but I think demand is still pretty strong. And my perspective on this is I think demand will stay strong for quite some time. So in that kind of world, we're having great discussions with customers further out in time. And the biggest part that helps us in our planning is through these product transitions. They know that's how they get more exabytes.
And once we are saying in the script, Dave, that for the rest of the calendar year, we expect revenue and profitability to continue to improve sequentially every quarter. So we are not implying in any way that this trend is changing. It's actually now getting better somehow.
Thank you.
The next question will come from Eric Woodring with Morgan Stanley. Please go ahead.
Great. Good afternoon, guys. Thank you for taking my question and congrats on these results. Incredible. Dave, at your analyst day last year, you kind of pointed to a mid-20% exabyte growth CAGR. And I'm just wondering where you think that supply growth can land, this calendar year. And as you get closer to that HAMR crossover point later this year, does that pace of exabyte growth accelerate? And I'm just asking this because demand is clearly outpacing supply. So can you maybe just help us try to better understand the shape of your exabyte supply growth? Because obviously it'll dictate kind of exabyte shipments for the year. Thank you very much.
Yeah, thanks, Eric. So we are planning to transition to 4 terabytes of platter and, fairly aggressively. But I think what people have to keep in mind is that we're fairly tight all throughout manufacturing. So we have products that are in the pipeline already that are committed to customers and so on. We don't just move very quickly to 3 or 4 terabytes of platter as things come. And it's a good problem to have, actually. We're running manufacturing quite tight right now. So I think it'll be a fairly prescriptive ramp, to your point. It won't be as fast as maybe we've done some ramps in the past, but it'll be very profitable, and that's the way we look at it. As we go further out in time, I'm very optimistic that the 4 terabyte per platter is a very strong product. It'll start to replace some of the other, legacy products, I'll say that way, and because it has so much better value proposition in a lot of those markets. And then when that happens, then we see more opportunity.
Great. Thank you, guys, and best of luck.
Thanks.
The next question will come from Asiya Merchant with Citi. Please go ahead.
Great. Thank you for taking my questions and great results here. Just a couple that are related to the prior question. You guys gave some projections on HAMR, not just for fiscal year 26, but even into fiscal 27. So if you could talk about, upside to achieving those targets for the HAMR rollout. And related to that, how we should think about the blended cost reductions, pretty impressive, again, margins here and guiding for improved profitability. So if you could talk to us a little bit about the cost reductions going forward, especially as you ramp HAMR here with the Mozaic 4, that would be great. Thank you.
Yes, Asiya. So I would say, first of all, we are very happy with the transition to HAMR. Now we qualified the last big cloud service provider in the US. and we have qualified 6 out of 8 of the top cloud service providers. So the transition from PMR technology to MR technology is progressing very well, and we are now qualifying the new product, the 4 terabyte per disk, so a 40 terabyte per drive. Of course, this will help with the increase in exabyte in terms of mix. We gave a good indication, I think, at our investor day, and we want to be aligned to that. And the cost will be favorably impacted, especially when we start ramping high volume of the 40 terabyte drive. Of course, that will drive a fairly important reduction in cost per terabyte compared to the current HAMR, and of course will be a good contributor to further increase our gross margin.
The next question will come from Karl Ackerman with BNP Paribas. Please go ahead.
Yes, thank you, Gianluca and Dave. I was hoping you could clarify what portion of your LTAs or overall nearline HDD capacity has fixed or multi-quarter pricing agreements. I ask because as these LTAs roll off throughout 2026, any new agreements will be locked in at higher values reflective of not only the main use case, but also widening price per terabyte gap between enterprise hard drives and HDDs. Thank you.
And Carl, the second part of your question was a little fuzzy, so we captured the first part, but might ask you for clarity on that second.
Sure. Yes, I'll just repeat if I could. As these LTAs roll off throughout 2026, I would imagine those new LTAs will be priced at perhaps a higher value or higher order value, particularly given the widening gap between hard drives and SSDs. So we'd comment on the mix of LTAs and how you think that progresses throughout 26 would be great. Thank you.
Yeah, thanks, Carl. So as we roll off, say, for example, somebody might have been qualified on a 2.4 terabyte per platter product or something, and then they might be qualifying a 3.2 or even a 4 terabyte per platter as we roll forward. So, we change based on the demand that we see, we change and our available supply, we change the pricing dynamic there. I think that's one of the biggest things you're pointing out. I'll say that 26 is fairly booked. We talked about that in the call, that to the extent that we can out-execute our plan, it'll be marginal, like you saw last quarter. We get the qualifications done a little faster. We ship a few more drives. That's how we can do better than planned. But other than that, it's fairly predictable in 26, and we're looking to start 27 the same way.
Thank you.
The next question will come from Jim Schneider with Goldman Sachs. Please go ahead.
Good afternoon. Thanks for taking my question. I was wondering if you could maybe address, given everything you just said about demand and about the mix effect from HAMR this year, maybe can you give us any kind of directional guidance about where you might expect exabyte shipments to end up on a calendar 26 versus calendar 25 basis, relative to the sort of long-term targets you've laid out previously? It seems like you could do materially better than that, but I'm just wanted to confirm what your expectations were if you could give us a numerical range. Thank you.
Hey, Jim, no, we are not guiding calendar 26, but we said in our financial model, we said that we expect nearline exabytes to grow in the mid 20%. We have done it a bit better if you look the last few quarters, and we always, as Dave said before, we always try to extract as many exabytes we can from our manufacturing. So no, we are continuing this trend, but we don't guide calendar 26.
But moving from 2.4 per platter to 3 per platter to 4 per platter, you can see that we're on a trajectory like you described. When it gets down to the individual customer level, obviously we have to be very predictable because they need what they need and what we've committed to in order to build out that data center. So we'll continue to execute that plan, and maybe we can do a little bit better as we transition to 4 terabyte per platter.
The next question will come from Amit Daryanani with Evercore. Please go ahead.
Good afternoon, everyone. Thanks for taking my question. I guess, Jonathan, I'm hoping you can talk a little bit about the March quarter guide because there seems to be a really sizable uptick in gross margins. I think it's up like 250 basis points or 100% plus incrementals. Is there anything you would call out in March quarter that's unique that's helping drive that kind of margin expansion? And is this really all coming from the core HDD business, or is there a potential benefit from the old systems business that's helping you as well? Thank you.
Hey, Hamid. Well, I would say no, we expect to be a very good quarter. I don't think it's different than what we have done before. No, it's always based on the pricing strategy and the mix. No, as you know, we qualified another customer on HAMR, so we will ramp a little bit more volume on HAMR. This is helping us to get better margin. But fundamentally, it's not really a difference in how we think we are going to execute the quarter. And it's good. I think the incremental margin was very good.
Yeah, and it's not the systems business. The systems business is doing well, but it's fairly small scale in comparison.
Got it.
The next question will come from Mark Newman with Bernstein. Please go ahead.
Great. Hi. Thanks for taking my question and congrats on big numbers today. Just want to touch again on this, the LTAs and pricing arrangements you have. Just curious, do you think there's an opportunity here for more significant price increases? In NAND flash, we're hearing things like 40 to 100% up Q on Q for some contracts. I appreciate hard disk drives. You have very long-term agreements, but I think there's a lot of questions. I'd like to just touch on this as well. A lot of, as the LTAs roll off, is there an opportunity for some of those to be repriced at a more significantly higher price to change the trajectory? Certainly, numbers are great. You're printing. We're just trying to figure out, could you start to see more significant price increases rather than at the moment you're seeing kind of flattish, down a little bit, up a little bit, but overall your average prices are flat, which I understand is a mixture of like for like, slightly up, offset by new products coming in at lower price. Just wondered if that may change. And then if it's just a quick update on HAMR mix, if there's any update on the trajectory of the HAMR mix that you've outlined before. Thanks very much.
Thanks, Mark. A couple of points. On the HAMR mix, we necessarily constrained ourselves on the 3 terabyte per platter because the factories were fairly full and we knew we would be going to the 4 terabyte per platter product. So we've been leaning harder on that and making sure it gets through the development and qualification phases. As time goes on, then we'll move off and onto the 4 terabyte per platter very aggressively. So that if that helps you on the mix side. And the other thing about HAMR mix is it'll be necessarily mixed up. I think the demand for those products will be at the high capacity points, not necessarily the lower capacity points just yet. And then relative to pricing, I think I said before, as one long-term agreement rolls into the next year, we've satisfied our existing supply commitments. And people are looking at the new products. We have constrained supply of those new products. Then we look at what the demand is and we dictate where our pricing is. And one of the very first questions I said is it could be flat to up a little bit. That's the way I think about it right now, but it all depends on what the demand is. If the demand continues very strong, that's great. And again, what we're seeing is people who can't get what they need today, they're saying, okay, I need to be able to plan my data center procurement out in the future. Let's get more predictable in the future. It's giving us better visibility, helps us run our factories for better costs and so on. So that's great.
Thanks so much.
The next question will come from Krish Sankar with TD Cowen. Please go ahead.
Yeah, thank you for my question. I had a question. I just want to put it in two parts. One is, how much was your HAMR as a percentage of your exabyte shipment last year? How much do you expect it to be this year? The genesis of the question is I'm just trying to figure out, obviously a lot of questions on the very strong gross margins. if there's a way to put it in three buckets, like how much of the gross margin upside is driven by pricing, how much is driven by product mix, how much is driven by cost reduction by offshoring manufacturing? Thank you.
Yeah, there's really no offshoring manufacturing or anything like that involved. Our manufacturing operations around the world are doing quite well and quite full, so that's helping from a cost perspective. But really no change in any manufacturing strategy to speak of. Relative, I would say a lot of what the benefits we're seeing is mix and mix, not just because we're actually transitioning into more better products over time, but also because the demand for those products is quite high. You think about it, if you're building a data center with a 3 terabyte per platter versus a 4 terabyte per platter, you're going to be running that data center for a long time. You want the higher capacity point. And to the extent that we can do that as predictably as possible, that mix is what's driving the stability out in the market for us and helping us plan.
Yeah, Krish, we don't give specific details on the impact of pricing, mix, and cost, but they are somehow interrelated. Now, the change in mix is helping with the cost reduction, and the supply-demand situation is, of course, supporting our pricing strategy. So they are all very good contributors to the increase in gross margin. And as we said before, this is going to continue through the calendar year.
How much was HAMR as a percentage of the mix?
Well, Dave gave an indication of the unit that we shipped in last quarter, so I think you can fairly easily calculate that.
Thank you very much. Thank you.
Thank you.
The next question will come from Stephen Fox with Fox Advisors, LLC. Please go ahead.
Thanks. Good afternoon. I guess I was just wondering on your mix question, looking at your average capacity per drive being up 22%. Like how much of that, like obviously the supply demand environment has tightened over the last year. And in reaction to that, are you taking steps to accelerate, that mix up as the customers pushed you that way? Like, I'm just curious how much you can control going forward now that we're here on even tighter supply to sort of help your customers in terms of absolute petabytes you're delivering.
Thanks, Steve. So yeah, the lead time out of the wafer fab is quite long. So, we have to be predictable for our customers, say 6 months, 9 months later, so on and so forth. That's one of the reasons why we talk kind of a year at a time inside of these LTAs. So we start wafers based on what we know we're going to be able to deliver so that we're as predictable as we can be for our customers. As if we're deploying manufacturing, engineering resources, we're trying to get through these product transitions. That's what gets us the most exabytes after that. And so, mixing up is kind of our goal. So if that helps clarify what our strategy is.
It does, Dave. I just wondering, like when you had your analyst meeting, you said that's sort of a pretty well-defined timeline for node transitions. Maybe just can you give yourself a report card on how you're doing on some of those timelines if we look out now versus the next year or longer term?
Yeah, I think that's good. We're on the plan or slightly ahead. And again, most of that's under our control. We execute well. We've been executing well. Some of it's under our customers' control as well. And the behavioral changes we've seen in the customer, I made reference to earlier, they're really pulling hard because they need more exabytes. And so that helps get the quals done quickly. It helps roadmap alignment and then specific supply alignment, which helps our factory. So
great, that's helpful. Thank you.
The next question will come from Aaron Rakers with Wells Fargo. Please go ahead.
Yeah, thanks for taking the question and also congrats on the results. I want to go back to gross margin. I know you talked a lot about the pricing dynamics and the visibility you have, but the thing that stands out to me is you've been executing on like a cost per terabyte, of like a mid-teens year-on-year decline these last several quarters. as we roll out the 4 terabyte per platter, Mosaic drives, how do I think about that cost down curve? Is it mid-single digit? Can you sustain a double digit? And wouldn't we expect the 4 terabyte per platter HAMR drives to actually maybe accelerate the cost down, given the ability to bring that into, lower end, other outside of nearline platforms? I'm just curious how you think about that cost down curve.
Yeah, we are very positive on the 4 terabytes per disk in terms of impact on the cost. As we discussed before, the unit costs tend to be fairly similar, but of course we are adding a lot of content per unit. So that will be a good help to reducing the cost and improving profitability. So as you know, we are qualifying 2 major customers on this new product. So the time to finalize the call and then ramp probably through the end of the calendar year, and for sure well into the impact will be strong, I think, in the next calendar year too.
Yeah, and we plan on making a big transition to 4 terabytes per platter over the coming few years, and then getting to 5 terabytes per platter as well. We do add complexity as we make those transitions, but I'd say the first order, the things that dictate the speed of the ramp are our ability to go work scrap and yields all through our supply chain and so on, and we're working very hard on that. I like the product, so I think it provides for a bright and stable future for us. We just need to stay focused on
it. Thank you.
The next question will come from Timothy Arcuri with UBS. Please go ahead.
Thanks a lot. I want to ask about LTSAs. I think you said nearline capacity is allocated through 2026. So it sounds like both pricing and exabytes are locked in this year. But for 27, I think you said something that I took, that exabyte and pricing is not locked in, but you have some sort of agreement. So I guess I had 2 questions. First of all, is it right to assume that pricing is also locked in for all 26? And what sort of agreement are you referring to for 2027 if volume and pricing is not locked in next year? Thanks.
Yes, for this calendar year, we said basically we have PO in place for all the quarters, so volume and pricing is well defined. As Dave said before, if in a quarter we can produce a little bit more, of course we will sell those exabytes in the open market at a good profitability. But I would say we have the vast majority of the volume is already allocated. Calendar 27, we will start working on that fairly soon. Of course, we have very good indication and agreement on volume, but we have not fixed the price yet.
Yeah, and Tim, if this helps, so we haven't really started the longest lead time parts, but we will very soon for the start of 27, and we need to start having those discussions with our customers. Which quals are we going to get through together with, what exactly is the plan? Because a lot of them need predictability as well. So we'll have to build in our factories based upon how hard they want to pull on those new products.
Okay, thanks.
The next question will come from Mehdi Hosseini with Susquehanna Financial Group. Please go ahead.
Yes, just a quick housekeeping item. Gianluca, your CapEx has been increasing on a Q-over-Q basis. How should I think about depreciation, especially since it did dip in the December quarter? Any color here will be great looking forward.
Yeah, no, our CapEx is aligned to our target of 4 to 6% of revenue. We are actually at the bottom of that range, so it's not increasing in terms of what we want to achieve or what we said. Of course, comparing to a period where we were more into the down cycle in terms of dollars, of course, is higher. We are supporting our HAMR transition and HAMR ramp. So I would say there is nothing different than what we said.
Yeah, I think that's the way I think about it as well, Mehdi, is that if you go back 2 years ago and you use that as a baseline, we were still significantly lower revenue, but also, we were challenges on the supply and demand balance. Right now, we're in a totally different environment, of course. So we'll probably stay well within the 4 to 6% range. But, as the revenue goes up, we'll spend a little bit more. And probably the first priority is maintenance tools and the things that we weren't doing a couple of years ago.
I apologize, I may have confused. I was focusing more on depreciation. Given these several quarters of increase in CapEx, should I expect a step up in depreciation looking forward?
Depreciation will follow the CapEx. So you have your model on the revenue, so you can calculate the 4 to 6% of CapEx, and then depreciation for us is on a 10 years useful life. So you can probably model in that way.
It's not like some other fabs. It's not necessarily the huge part of the cost drivers. There's a lot of other pieces of the cost that we can go manage. So.
Gotcha. Thank you.
The next question will come from Ananda Baruah with Loop Capital. Please go ahead.
Yeah, guys. Good afternoon. Thanks for taking the question. Hey, Dave, while we have you, a little bit of a technical one. What kind of activity are you seeing, at sort of the so-called warm tier of storage? It's a question that comes up a bunch in our conversations. We've heard that it's obviously growing. It's growing, both hard drive and flash storage is participating nicely, but would love to get your input on it, because I think there's still, first of all, we'd love to know if what we're hearing is accurate, but secondarily, I think there's a lot of people that are assuming that that's really like it's becoming a NAND tier, and largely a NAND tier in a Gen AI world. And anyway, just would love to get any context there that you have. Thanks.
Yeah, I think you have to be a little bit careful, Ananda. So there are applications that are very memory dependent. Some of these applications are neat. I like them. When you start talking about big data storage, if you will, in data centers, the tiering architecture is fairly well set and probably won't change based on economics and also architectures that are well known. People know how to play. So if the concept is that drives aren't working hard, they're in the background just storing data, that's not a good way to think about it. That's not the way hard drives are being used right now. They're working 24/7. A lot of times they're optimized for performance themselves, largely streaming performance, not random small block workloads. That's more of a memory thing. And so, if you had an application that's random small block, it's probably memory. If you have big data, it's probably a little bit of memory on the front end and a lot of hard drive on the back end. And we think that there are applications across the entire spectrum, of course, but we think that in the future, when we start to talk about the concepts in their enormity about checkpoints and physical AI and video and things like that, it's large data. So that the architectural tier that stores the data will probably remain constant for the next decade.
That's super helpful. I'll keep it there. Thanks a lot. That's great.
The next question will come from Vijay Rakesh with Mizuho. Please go ahead.
Yeah, hi, thanks, Dave and Gianluca. Just a quick question on HAMR. I know you're ramping it faster in the March quarter. Should that drive a much better gross margin profile, I guess? And any thoughts on how we should see the margins improve, I guess, as HAMR starts to ramp? And I follow up.
Vijay, if you are referring to the March quarter, of course, the ramp of HAMR is included in our guidance, and our guidance is indicating a fairly good improvement in gross margin again. And then I said for the rest of the calendar year, we expect both revenue and profitability to improve sequentially. And of course, part of that is coming from additional HAMR products.
We think demand will be strong for the 4 terabyte per platter, of course, and so that's one of the reasons why we're making that a priority in the transition that we go through this calendar year and into next.
Got it. Very helpful. And just a quick question also on the OpEx side. Very nice. Obviously, OpEx, same time last year, somewhere in the 14% range. Now it's down to 10%. I know, Gianluca, you said probably that's a long-term target, but looks like, as Dave mentioned, with top line ramping up, with all the design wins, looks like OpEx could go down again. Is that fair as a percent of mix?
Well, I would say, we are getting closer and closer to our force target of 10% of revenue for OpEx. We are almost there. We should be there actually in the March quarter. And then, of course, that we relax our cost control, we will continue to keep our cost control, and revenue is supposed to increase, so we can probably do it a bit better.
Yeah, I'm glad you asked that, Vijay, because, obviously a few years ago, the tough times that we went through, we weren't investing in ourselves to the rate that I'd like. And of course, it's with the HAMR transition in front of us, that was a lot of work. Now that we've kind of cleared that HAMR transition, we can see the future fairly well. It's, the clouds are parting, if you will, and we can see aerial density opportunities in front of us, and we will take the money such as it is, even staying within our same model, and we'll take that money and reinvest in ourselves so that we can continue to drive the aerial density.
Got it. Great. Thanks a lot, guys. Appreciate it.
This concludes our question and answer session. I would like to turn the conference back over to management for any closing remarks.
Thank you, Nick, and thanks to everyone for joining us on the call. The Seagate team is executing very well, delivering on our financial targets and advancing aerial density roadmaps, and successfully qualifying customers on our HAMR-based Mosaic products to address the sustained and growing demand for data storage. As data creation accelerates, driven by both traditional workloads and these emerging AI applications, Seagate's transformational technology positions us well to capture the significant demand opportunities ahead. I'd like to thank our employees for their dedication and innovation, and our customers and suppliers for their trust and collaboration, and our shareholders as well for their continued support. Together, we're driving Seagate's ongoing success. Thank you.
The conference is now concluded.